What's going on, traders? Welcome back to my YouTube channel. In today's video, I'm going to be breaking down exactly how I made almost 3K trading EURUSD in just 4 hours. But before we jump into the video, make sure you hit the subscribe button so you don't miss any more content. If you want to join our Discord community with over 10,000 people, where we go live 3 times a week, breaking down our trades for you guys completely free, click the link in the description below. But for now, let's jump straight into the video. Right guys, I'm going to break down this trade that I've taken on EURUSD this morning. Just going to start by looking at the market structure, and then we'll get into the exact position I've taken this morning and the reasons for it. And obviously I'll show you the trade as well. And then we'll keep you updated on how it goes. So to start with, first of all, this is EURUSD on the 1 minute time frame. So this is like a day trade scout, getting in and out hopefully as quick as possible. But market structure does happen on all time frames. You know, chart patterns, market structure, all happens on every time frame. So it doesn't matter if you trade the 1 minute or you trade the 1 hour, the 1 day, you will see price action happen everywhere. The only thing that changes is just the duration that you stay in the trades for. So, you know, that's basically it. So to start with, you know, we can see that price was in bearish market structure this morning. We were forming lower lows and lower highs. The market was dominated by sellers until we saw this shift in market structure, which we'll talk about now. So first of all, we're just going to visually represent, you know, this bearish market structure by drawing in, you know, this trend line here. So again, the only reason I use trend lines is to just visually represent for myself, for you guys, and you know, people that watch my trades, just so you can understand that, you know, price is moving in bearish market structure. But then what happened? What was our first kind of initial signs that this was running out of momentum and that buyers are soon to step in? Well, it happened down here, and we can see that once price formed this lower low within the market and then formed this lower high, we then failed to form a new lower low in the market, and instead we formed this higher low. Now that higher low is not confirmed until this level in the market is broken. Okay, this is our key level. One thing to notice as well is the way we actually approach this level. You can see that this move to the upside is very impulsive. Okay, we're not correcting like how we did here. We're not pulling back correctively. We're moving to the upside in a strong bullish force. So that just kind of shows us that that's first initial signs. But then again, we pulled back, we formed this higher low, but this is not confirmed until we break this structure. So we drawed in this level here, and then once that was broken, which it did, this is our confirmation. Okay, this level here, which we broke out to, is our confirmation. Okay, we've broken to the upside. Not only that, but the way we've actually broken it is very impulsive as well. That's one key thing we need to make sure happens, is that once we break this level, we're doing it in an impulsive phase, because we know that the market likes to move in 2 phases. It likes to move in an impulsive phase followed by corrections, and then if it's a bearish correction, we know that the high probability is that we're going to move like this to the upside in another bullish impulsive move. Likewise, if we were doing the other way and we had bearish impulses, if we're correcting to the upside, we know that the probability is for another bearish impulsive move. That's exactly what's happened here. We broke to the upside impulsively, and then the way that we pulled back is correctively. Okay, so we had a nice impulsive move here, and then what we're doing now is we are correcting to the downside, building liquidity to hopefully then have that bullish impulsive move, which is what we're in right now. Another thing to add is the way that we've actually pulled back and retested this previous level of resistance here, and we've pulled back. If I just drag this across, we've used it as a support level. So this was once resistance, we've broken through it, we've pulled back and used it as support. What other confluences can we add within the market? We can add our Fibonacci retracement tool. If we use that from swing low, drag it to swing high, drag it across, we can see that we've also retested the 50% Fibonacci level. Again, another nice level within the market. That would have been a nice entry. However, to be completely transparent with you guys, we just wasn't on the charts at this time, which is absolutely fine. There is many opportunities to enter this market. So just to tell you guys, you know, that would have been a nice entry within the market, and then you could have targeted up here. So that leads me on to my targets. You know, where am I expecting price to go to? Well, we have this nice level of resistance up here throughout the market, which we're going to be using as our targets. Now, EURUSD, I do believe we're going to see a lot more upside potential, but sometimes you need to just be taking profits off the table, not being greedy, not letting emotions get to you. And sometimes, you just got to secure profits off the table. Not every trade, some trades you can leave to run, but with this one in particular, I am going to be taking profits at this level. So how did we actually take our position within the market? So as you can see, price corrected, we retested previous resistance and support, and then we impulsed away again. Now notice that we impulsed away and we actually broke the highs. So we're confident, price is bullish now, we're breaking the high points, we can draw another level throughout here. But what actually happened is very, very significant. As you can see, we broke through these highs and then we pulled back and we retested this level again. Notice how we retested it. We had bearish candles. Then we had a slowdown in momentum by 2 dojis, so 2 indecision candles. And then we had a nice bullish engulfing candle. Now, a lot of people would be entering buy positions off of that bullish engulfing candle, like so, putting their stops just below. So we're looking at what other traders are doing throughout the market. We want to be observing the market from an outside perspective, what retail traders are doing, what people who are losing money in the industry are doing. They are entering trades there and they're obviously targeting the same level like that. But their stops are just below. That's the key thing, because then what happens is price is pulling back again and stopping these people out. We're creating a new low in the market. So we're stopping these people out. These people who entered this trade have now been stopped out. Okay, so they're out of the market. And then what happens is we impulse to the upside again, breaking the highs. Okay, we're breaking the highs consistently here. So we break to the upside, but then what happens is very, very key is we actually pull back once again to retest, not this level, but this level throughout the market. Okay, so we have 1, 2, 3, and now 4 touches of this zone. So this zone is our significant zone within the market, not this level here. There's nothing really to say that this is a strong support. This right here was just a fake out, a stop hunt. So that is not a significant level to us. Now, like I said earlier, chart patterns are used throughout every single time frame, all market structures, all currency pairs. Chart patterns happen everywhere. So what chart pattern can I see here? Well, I can see an inverted head and shoulders pattern. I can see the left shoulder here, the stop hunt fake out has created our head, and then we pulled back and we've actually created our right shoulder. So that's our right shoulder within the market. Now that was the reasoning for our entry. We're just stacking up confluences here. The more we're stacking up confluences, the stronger this trade will get. So, we've had breaks of the highs, impulses, corrections, 50% Fibonacci, breaking the highs again, stop hunts, fake outs, retesting once again, inverse head and shoulders. So the confluences are just stacking up. So the reasoning for the entry, as you can see, we pulled back, but then we had this nice bullish candle showing us that buyers are stepping into the market again. And that was the reasoning for our entry. Reasoning for our stop loss, just below the low, safe entry, safe stop loss, just in case, we pull back. We want to be out of the market if that happens. And then the targets are this level up here, making for like a nice 1-to-5 risk to reward ratio. Notice what I'm not going to be doing is I'm not going to be trying to get the most out of this trade and squeeze it right to the top of this take profit, because what you'll find is as price starts to approach this level, we will start to slow down in momentum. We'll start to see wicks, we'll start to see pullbacks. And that's when, a lot of emotions can come into play. You'll start asking yourself, should I close? Should I do this? Should I do that? So what I normally do and what I would advise to do is to not try to go for the very, very top, is to just be happy with, just below. In this instance, just below is like a nice 1-to-5. So I'm just going to close out for a 1-to-5 rather than risking gaining that extra 0.7%. I'm going to be getting out our 1-to-5, which is that level there. Let me show you the position. That's the position right there. And what we're not going to be doing is we're not just going to be setting and forgetting. We're not just going to be allowing the market to do its thing. I am going to be managing this trade quite tightly. If we get a nice bullish impulsive move away from this level, I will be trailing my stop losses to break even. Once we start reaching key levels within the market, I will be managing that trade. For example, here, that's a nice level of resistance. I will be managing the trade there to potentially see if we get like a big rejection. I'll probably look to close or trail stops. How will I be trailing my stops? I will be trading stops with market structure as well. So as price moves up, we are going to get some dips, something like this. It doesn't always just move in one linear line to take profit. We're going to get some type of market structure in which I will be trailing my stop loss with this structure. So I'll be moving my stop loss to there and then to there and so on and so forth, just to secure profits off the table. But yeah, guys, that's essentially it. That is the trade I've taken this morning on EURUSD. And I will update you guys with how it goes. I get asked all the time, what is the best time frame to trade on? Now this comes down to your own personal preference, your lifestyle, and how well you manage emotions. Market structure and chart patterns take place on all time frames, whether it's the 1 minute, the 1 hour, or the daily time frame. It always takes place on every time frame. You're going to see chart patterns and market structure everywhere. It's just on the lower time frames, you're going to see more of it, meaning there's actually more trading opportunities on the lower time frames. So you're going to enter more trades. But remember, this doesn't mean more wins, it can also mean more losses. So you have to take that into account. I personally took the shift from being a swing trader to being a day trader. The reason for that is because I do prefer entering more trades and also getting in and out of my trades quicker. So for example, if I take a losing trade, I would rather be wrong quickly and lose quickly to be able to learn from it and move on a lot quicker as well. As well as that, I prefer taking a lot more trades because with more trades, it means I'm stacking up my journal. And then the more trades that I've taken, the bigger my database is to then learn from it and really refine my strategy. But remember, trading for you has to be unique to yourself. So if you are choosing which time frame to trade on, make sure it aligns with your own personal preference, lifestyle, and how well you can manage emotions. Okay, so an update on this trade. As you can see, we're in it. We're currently running in profits. However, we have had a lot of consolidation whilst we've been in the trade. So I'm just going to tell you my thought process right now, how I've been managing the trade, and also how I'm going to look to continue managing the trade. So essentially, once we broke this high point here, this was our most recent higher high. Once we broke that high point within the market, that is when I moved my stop loss to break even. So right now I am running this trade at break even. So I have no risk on the table. Worst case scenario, we get stopped out at break even. However, as you can see, that point that we did have where I was going to look to manage the trade, as you can see, it is being used as a strong level of resistance within the market. We've rejected it 1, 2, 3, and almost now 4 times. So it is a very, very key point within the market. But how am I going to manage it? And that's a decision that I have to make. When you're trading, a lot of people kind of tell you to just set the trade and forget it. However, in my opinion, trade management and what you do after you place the trade is actually the most important factor, because there's going to be fixed and there's going to be variable things that you need to do whilst the trade is developing. So what I mean by fixed is the decisions that you make before you enter the trade. Meaning I knew that once the trade was going to break this high point, I was going to move the trade to break even. So that's a fixed variable. But the variable one that's going to be changing is when the trade reaches this level of resistance, how am I then going to manage it? And the decisions I have to make is, am I going to close the trade? Am I going to take partials, or am I going to just leave the trade to run? Or what am I going to do at this situation? So I'll tell you now what I'm going to do. So in my opinion, we've had this resistance level which has been tapped 4 times now. And to a lot of people, that means that it's a strong level of resistance and there's going to be a lot of sellers stepping in. But in my opinion, the more times a resistance level has been tapped and has been tested, the more likely it is going to break. It's like a brick wall. Like the more times you smash it at a brick wall and you smash it with a hammer, eventually it's going to be broken. So that's the way I view the markets as well, and this level of resistance, that the more times it's being tapped, I do believe it's going to break through and then go towards our TP. So how am I going to manage it? I am just going to leave it to run, because for me, if I close now, the market is currently at around a 1 to 2. I could close now at a 1 to 2, or I could potentially be making the 1 to 5 potential. So for me, it's not worth it. I would rather risk getting stopped out at break even than not risk getting the final take profit of a 1 to 5. Because as you can see, we were very lucky actually. We didn't actually get tapped out at break even. All price was doing was coming back and grabbing some more liquidity below these low points here. As you can see, we had a nice support there. We just dipped a little bit below to grab some more buy orders, and I do think like this level is going to be broken. So that's how I'm managing it. Worst case scenario, we come down and we gain nothing. That's absolutely fine. That's just what we have to accept. That's another thing as well. I bet a lot of you in your trading, once something happens, you're regretting. So as an example, a lot of you will say, oh, I wish I held for longer, or I wish I didn't take profits, or I wish I didn't trail my stop loss to here. When you're trading, you need to be very disciplined and systematic, meaning if you're making a decision, no matter what decision you make, you have to stick with it and you can't be annoyed at the outcome, like I just explained. So yeah, guys, again, we're going to update you on what happens, but I am expecting price to break through this resistance and head towards our take profit, but we'll see what happens. Worst case scenario, we get stopped out at break even, but I will update you guys with price action. Thank you for watching this video, guys. Remember, if you want to join our Discord community where we go live 3 times a week, breaking down our trades for you guys completely free, the link to our Discord will be in the description below. If you like the video, remember to leave a like and comment, let me know your thoughts. But for now, enjoy your week and I'll see you in the next video.